So July, not a bad month at all for the stock market. We started to move a little bit more back into the positive direction after an ugly few months. And it feels good to see a bit of positivity coming back. I mean, I don't think it could have got any more negative. It is the most negative and aggressive market of a sell-off that I've ever been through, and it was ugly. But we're seeing a little bit of light at the end of the tunnel, and we'll see how this goes on. It's always important to remember that when stocks go down like that. When stocks go up, it's always that slower kind of uptrend. So we'll see where we're at, but a very good month that we've just had, and it's seen a few stocks have a nice little bounce. So we're going to talk about a new stock today that came out with some really positive news and what that means for that business going forward. It's a stock that I own, and it's a massive deal that it signed yesterday. A little bit of a shout out though, not enough to make a full video on it, but I wanted to shout Pinterest. What a move this is doing in pre-market or after hours. It reported earnings on Monday, and then after that the stock is up currently 20% today. Now I've got to say, I mean, this is just bonkers, because I actually looked at Pinterest's earnings report and I went, why is it up 20%? Like, I generally couldn't find the positive of why it was up so much. I mean, there was some okay numbers in there, but apart from that, like, it wasn't amazing, and the stock's up 20%. I don't know if that's just because we're entering a bit more of a positive market. I don't know if it's just because we're so sold off. You know, you look at Pinterest, and since its 52-week highs in February time, you know, it's lost 76% of its value. I don't know if that's what it is, but yeah, this is a crazy move after hours. So yeah, I will talk about, if you don't know, on Patreon I do a review of earnings, so I will talk about Pinterest a little bit more when we do the review of earnings towards the back end of the week. But we're getting on to today's video, which is about Celsius. Celsius was up 11% yesterday. In fact, at one point it was actually up, like, I believe it was 17%. I know it broke into that $100 range, $110 52 week highs. Sorry, $105 on the high, very close to its 52 week highs of $110. And this is one of those stocks that is just like slingshotted. We talked about this for a very long time, is that there's all this negativity priced into these stocks at the moment, that when we do have that little bit of a bounce, don't be surprised that a bounce is aggressive, and people are trying to time the bottom. It's very easy to miss that bottom, because if it is the bottom, boom, it's gone quicker than what you can, where you think it is. It just totally goes out of that range where you wanted to buy. And you can see here, like, you know, we're at $42 on, you know, Monday, the 14th of March, or, you know, Tuesday, the 10th of May. At $40, and then boom, the stock is up 139% in that time frame. Absolutely huge amounts. And for me personally, I'm up, I think it's something like 60+% on this position right now. So it's been a really good runner at the moment. I've got to say, I will say this right here, is that I do believe this valuation is a little extended. I mean, people always point out this 783 P ratio and go, oh, but it's a 783 P ratio. The thing is that a lot of people don't realise is that if you're a business that only just slightly becomes profitable at the time, you're obviously going to have a high P ratio. It's about looking at what the company's growing at, and you can see here that the revenue growth was 166%. You can see the net income's growing at 1,041%. So this here, a lot of people always, I had this originally when I talked about Celsius, people shouted out going, oh, but the P ratio. If you're just purely looking at P ratios, you're never really going to be very successful in the stock market. You've also got to look at the bigger picture here. And this business is absolutely growing at insane rates. Don't get me wrong, I do think now when you factor in insane growth in the next few years, I still think it's now a little bit of a rich valuation, and personally, for me, I won't buy Celsius at these sort of levels. But for me, that's now invested into this company for the longer term, you know, the next kind of 5 years, I'm just happy to hold and see where the market kind of takes it, and if the time is right, I will release some profit off the table. But I am happy to kind of sit back now and let this position play out. Now, what was the news yesterday of why this stock performed absolutely amazing? Well, it had a major partnership. The major partnership was with Pepsi, one of the big partnerships you'd want to have in the drink space. And the main positive that I straight away took with Pepsi, if they are investing in the company, there's two things actually straight away. One of the most negative things that Celsius has ever had with it is that people have questioned the legitimacy of the financials. And clearly, if Pepsi were willing to put this stake into the company, I'm sure they've done proper due diligence on that, and I'm sure they're happy with that. So yeah, that's obviously a positive. And the next thing is that if one of the major drinks players in this space has actually gone, we cannot match this. We need to have some sort of part of this business. We need to buy a stake in this business, and we need to work together with that company. That's a really bullish sign that Pepsi have recognised Celsius and gone, we need to have a stake in it, which is amazing. Now, I've got to say, I thought the deal was very positive for Celsius and Pepsi. I think that when you look at Celsius and what the benefits they get from it will only increase the revenue and profit very much in the future. I also think the stake that they paid for Celsius was actually very generous to Pepsi as well. So I wouldn't say either parties came out ahead of one another. I think it was quite a fair agreement overall. So it was a long-term distribution agreement and investment. So it includes retail and food service channels. So that's the key thing, is that obviously this is going to give Celsius automatically more outlets that they currently don't sell in. And also a key thing that they obviously don't do that much of at the moment is food service channels. Now, they did do a conference call and they went in and said a few other parts that they're kind of expanded into. So yeah, basically this will just give them more exposure. Obviously more exposure will lead to more revenue and more profit, which is absolutely great. And also it become the preferred distribution partner globally for Celsius. So obviously they are going to be sending out all the products for Celsius, which is good. One thing that I think a few people were straight away wary about is the overlap of moving to the Pepsi, and will that cause any problems for Celsius when that transition happens? It look, from what the manager was saying, they're very much aware and they're already watching it, and they shouldn't see too much impact. So maybe there would be some short-term issues there, but the thing is that the key word here I thought was globally, and it was also mentioned on the conference call that this will actually allow Celsius, who already have quite a dominant footprint in America, but then expand into Canada and especially the EU launch. We've talked about this for a long time, is that when you look at Celsius, their main footprint of them is the US based. We're not even talking about a worldwide company yet. So this deal will especially start launching that worldwide expansion very much. So it's going to be very key next kind of 24 months for Celsius for this global expansion. Now they have the Pepsi deal, so very exciting. I think that will obviously, hopefully, already lead to very increased amounts of revenue and profit in the next few years because of the global partnership they will have now. The transaction was that PepsiCo made a net cash investment of 550 million to Celsius. Celsius actually ran through what they were going to do with that 550 million, which I think they did need a little bit of cash as well, which we've talked about. One of the weaknesses with Celsius is that kind of cash side of the business, so I thought that worked out quite well. In exchange for convertible preferred stock, the transaction was priced at $75 per share, which I thought was very interesting. It was at $75 per share, or approximately 7.33 million, which equates to an estimated 8.5% ownership in Celsius. And as a converted basis, the preferred shares will also be entitled to a 5% annual dividend as well. Also, that there is going to be someone on the seat on the board from Pepsi as well, which is yet to be selected. So yeah, overall, I think Pepsi got a fair deal for it. I think what this will mean for Celsius in the long term and the stores that they'll be able to get into now and the expansion that they will have is massive. I think they needed this, and I think it's the right time, and also it's a decent price, and I think it will only accelerate Celsius now in the next kind of 5 years. And it's very much when you look at something like a Monster beverage, I think Pepsi always slipped up really letting Coca-Cola get into Monster beverage. Monster partnered up with Coca-Cola quite early on, and that obviously led to Coca-Cola getting a very good investment from it, and also it was the kind of leg up that Monster needed to expand and get their product out more and more. We saw this in 2014 when Coca-Cola bought a 16.7% stake in Monster beverage, and it was to help Monster access all its global distribution centers that it had. And that really gave it its leg up, and we then saw how well Monster beverage performed over the next few years. And we've always said that this is potentially the next monster beverage. And you can see here, you know, when in 2014, when that deal was done with Coca-Cola and Monster, it was really the key driver for it to go even more bonkers. And then we saw the stock go from $22 to where it is now at $96. So yeah, very good. I think this is a very good partnership. I look forward to see what happens here with this deal, and I think it'll drive a lot of growth forward for the company as well. And I think Pepsi got a good deal as well. So yeah, overall, very positive news, and look forward to just seeing where the story goes more than what it already has done since I've been invested in Celsius. So yeah, hope you enjoyed the video anyway, guys, and well done to all you Celsius shareholders. You're doing very well at the moment, and I'll catch you in a bit.